Imagine this. The global economy is panicking. Stocks are crashing. Investors are scrambling for safety. But instead of rushing into U.S. government bonds, the safest asset in the world, they're selling them. Why? Because they no longer trust the people in charge. This just happened. And it could change the way the world sees America, not as a financial safe haven, but as a risk. Part 1. The tariff threat and the sudden U-turn. While I was away on holiday, something strange unfolded. Former President Trump had been ramping up threats of sweeping tariffs on multiple countries. This wasn't new. But this time, global markets really started to feel the heat. Stocks were plummeting in the US, in Europe, in Asia, pretty much everywhere. Now, usually when markets crash, leaders either panic or pivot. But Trump, he didn't flinch. Publicly, he seemed totally unfazed by the market turmoil. Every day, the headlines screamed global sell-off. And yet, the White House stayed the course. And then, out of nowhere, he reversed. No more aggressive tariffs. No more brinkmanship. So what changed? Not the stock market. That had been collapsing for days. What actually changed and caught the White House off guard was this: U.S. government bond yields started rising. That might sound like financial jargon, but it's absolutely central to the story and potentially to the future of the global economy. Part 2. Bonds 101. Why this matters. Let's break this down simply. When governments borrow money, they issue bonds. Investors buy these bonds and earn interest, which is called the yield. U.S. government bonds are typically the world's safest investment. They're like the financial version of hiding under a fireproof blanket during a storm. So, during a crisis, people usually dump stocks and pile into bonds. That drives the price of bonds up and the yield down. That's how it's always worked. Until now. This time, as the stock market crashed, investors also started selling U.S. bonds. Why? Because they weren't just worried about short-term chaos. They were worried about who was steering the ship, about the long-term credibility of the U.S. economy and its leadership. And when bond prices drop, yields rise. That means the government suddenly has to pay more to borrow money, which can massively increase the national debt burden. It's like having your credit card interest rate skyrocket overnight. Part 3. Why this scared Trump more than the stock market. So here's what likely happened behind the scenes. Trump's economic advisors probably told him, "Mr. President, we expected a stock sell-off. We were ready for that. What we didn't expect is that investors would lose confidence in U.S. bonds too." That's a whole different kind of crisis, and far more dangerous. Because when people stop trusting U.S. government bonds, it's not just a bad day for markets. It's a systemic warning. It's a global signal that the financial anchor of the world, the U.S., is being questioned. And that's the moment Trump backed off. He didn't reverse course because Wall Street was hurting. He reversed because the U.S. was starting to lose credibility economically, institutionally, symbolically. Part 4. The Truss Premium and America's warning sign. Now, let's connect this to a moment that might sound familiar to Europeans. Liz Truss's ultra-short tenure as British Prime Minister. In 2022, Truss announced a sweeping budget filled with massive tax cuts for the wealthy, without any plan to pay for them. She bypassed independent fiscal oversight and hoped the markets would just go along. They didn't. The result? The pound tanked. The stock market crashed. And most importantly, UK government bonds were dumped. Yields shot up, borrowing costs soared, and interest rates on everything, from mortgages to business loans, spiked. She lasted just 44 days in office. That market reaction created a new phrase, the Truss Premium, an extra cost a country pays when its leaders appear reckless or out of touch. Here's the scary part. That term is now being used for the United States. For the first time in modern financial history, the U.S. is paying a premium because the world is starting to question its stability. That's unprecedented. Part 5. What this means for all of U.S. This isn't just about Trump, or tariffs, or even bond markets. It's about a deeper problem, how fragile the system really is, and how much damage a handful of people in power can cause when they ignore expertise, transparency, and accountability. We built global financial systems that depend on trust. But that trust isn't infinite. And once it breaks, even slightly, it's incredibly hard to rebuild. This is a wake-up call, not just for America, but for all of us, because the global economy runs on confidence, not just in money, but in governance. Part 6, the way forward. Systemic change, not just new faces. Now, here's where I want to offer something different. People always ask, how we fix this? And most answers are just, elect better leaders. But I think that's not enough. We don't just need new leaders. We need a new system. A system where the public is involved in decision-making before crises happen. Where policy is guided by facts, not slogans. Where technology is used to amplify collective wisdom, not just spread propaganda. Around the world, we're seeing promising experiments. Citizens' assemblies in Ireland helping shape abortion laws. Participatory budgeting in parts of Europe. Digital democracy platforms in Taiwan that allow real-time public input on policy. These are real solutions, not science fiction. We can use open-source tech, AI, and smart data tools to build decision-making systems that are transparent, inclusive, and resilient. Imagine politics where every voice is counted, every decision is informed, and every leader is held accountable, not just at elections, but every day. That's the future I believe in. Closing call to action. This channel is my small way of pushing in that direction. I'm a psychiatrist by training, and I care deeply about how people think, how societies work, and how we can govern ourselves better. If you found this video helpful, please like, subscribe, and comment. Let's start a bigger conversation, one where we stop reacting to crisis and start designing a better system.